Hello gentlemen, it's Gavetti here, back with another video. Today I want to talk about the topic of credit cards and how you can build your credit. Now, credit cards are a great tool to build your credit, which in return can basically get you great loans on cars, personal loans, um, a home loan. So you want to build your credit as early as possible. Now, a little bit of a backstory for me. I opened my first credit card. It was Discover It credit card. I highly advise you, if you're an 18-year-old, 19-year-old, or college student, to get the Discover It credit card. There's no annual fee. With credit cards, you want to make sure that you're not getting a credit card with an annual fee, because you're just basically paying to have a credit card when there's so many different options and having free credit cards. So that's my first tip. The only annual fee credit card I'd ever spend money on is an Amex credit card. Now, there's many different loyalty bonuses, many different ways you can make back that money. I believe it's like $200 or $150 a year, but Amex is the only one I'd ever spend an annual fee on. But other credit cards like Discover, Chase Freedom, Bank of America, Capital One, there's so many different opportunities at getting a credit card without an annual fee. So definitely skip that. And usually the people that have more money and have a business, higher net worth, can afford to get that Amex credit card. But essentially, you want to build your credit as early as possible. I started out as an 18-year-old. I'm 24 now. I've never had any issues with credit cards. I'm very financially disciplined because I use a credit card basically for any time I would use cash. That's how I look at it. So like, let's just say I'm going to the grocery market. I'm never going to use my debit card because you don't get cash back. That's a huge incentive for credit cards, is that you get cash back rewards points. Usually on average, it's like 1 to 2%. There are certain cards for certain needs. Like I know Chase has a program, I think the Freedom Flex, or one of their credit cards, where you spend it at a grocery store, you get 5% cash back. But that's only if you use it like a Trader Joe's, Whole Foods. Like it's specific to that category. But on average, you're gonna get like about 1% to 3%. Try to look for a 2% cash back rewards card. I know Citibank has a 2 to 3%, which is a good one. I don't have Citibank. Personally, me, I have Fidelity Rewards, which is my favorite, because essentially any type of cash back. Fidelity is basically a brokerage. I mentioned in other videos where you can essentially take that money and invest it right into stocks. So that's a great rewards card I use. I have 2 Chase cards. One I opened up in college as well. Chase College Freedom, a student card basically. I don't plan on closing any of my credit cards. That's one thing. You don't want to close your credit cards because it hurts your credit history. Now there's multiple different factors that make up your credit score. Utilization, you want to basically keep that below 10% if you can, maybe 20%, but try not to max out your card. So basically, like I said earlier, I have 2 Chase, 1 Freedom. I have an Amazon Rewards because I shop on Amazon, so why not? If I shop on Amazon, I get cash back. I believe it's like 3 to 5%. So anytime I use a purchase on Amazon, I get a decent amount in cash back points, and those points always add up over time. And you can use those points for whatever you may be. If you want to buy more things, if you want to invest, you can always cash out into your bank account and use whatever money that you got from those cashback rewards. So like I said, Fidelity, 2 Chase, Amazon. I opened up a Bank of America recently. They had a great incentive where if you spent $1,000, you get 200 cash back, which was good, which I utilized. And then I also have, what else? I also have a Discover It. Like I said, that was my first card. I still have it to this day. No complaints whatsoever. And then let me check one more. I think, yeah, that's about it. That's all I have. Yeah, 7. So I have about 7 cards. People advise not to open up so many credit lines because it can negatively affect you, but that only affects you if you have poor habits. So like I said, referring back to using it as cash. If you don't have the cash on hand, like in your bank account, in your checkings account, or in your savings account, do not spend ridiculously. That's the problem, is that people will look at credit cards as evil. They're not evil. Your habits are putting you in that position where you think that credit cards are evil. I know these companies that offer these credit cards will give you a crazy credit line limit of 15K, 20K. That doesn't mean you have to use all that 15K, 20K. Like I said, keep your utilization under 10% and you should be fine. So for example, I have on my Discover, I have a 10K credit limit. I've increased that limit as I've gotten a job. It ties into your annual income. So they always look at that and your frequency of using the card. So I have a 10K credit limit. I literally probably will have like $150 to $300 max limit I put. So my utilization is like 1 to 3%, which is really good. The credit card companies want to see that. So you're kind of incentivized when they give you this limit to use all the limit. Don't do that. If you don't have 10K and you spend, keep swiping that card and racks up, and you don't have the money or the funds to pay it back, you're going to hurt your credit. I have a credit score of around the 805, which is really, really good. It favors me now if I want to get a personal loan, if I want to get a business loan, if I want to get a auto loan, if I want to get a homeowner loan. Like my credit since 18, which has taken me about 6 years now, from when I started out, I think I had like 600 to 805. I did that because I was disciplined with my finances. Just like investing, I'm disciplined. I invest into the market every week, every month. You have to build those financial habits first. If you don't, you're going to get into debt. I'm sorry. That's just the nature of the game. And that's why people say it's evil. But no, it's not evil. It comes down to your approach and how you look at credit cards. Like I said earlier, cashback rewards, favorable loans, getting at a good interest rate. Now there is interest rates like APRs, like 27%, which may scare you. Essentially, that means if you don't pay your debt to that credit card company in full, you will tack on interest. Now this is where it gets dicey. Like not only will you owe whatever original amount you owed and you haven't paid, they're gonna tack on interest each and every month you don't pay off that loan, pay off that debt. So if you have $1,000 in debt and you haven't paid that $1,000, it's only going to keep racking up, and the interest is going to keep racking up at whatever percent it is. Usually it's 25 to 30%, or maybe even higher, depending on the credit card company you sign up for. So please avoid that. Avoid that at any cost. You do not want to put yourself in a position where you're financially struggling because you can't afford to pay off your debt. And not only that, you can't afford to pay off the interest. So keep your utilization very, very low. Just because you have a 10K, 15K, 20K credit limit does not mean you should be spending all of that money. Now, credit cards are a great tool to utilize for yourself. And you want to build credit as soon as possible. Now, I know there's, maybe younger generation, like 18 and younger, that really don't have the ability to get it because the age range, for you to qualify, you have to be 18. Now you can get someone like a parent or a cousin to actually secure that credit card for you at a young age if you want to build your credit really young and actually position yourself great financially in the future. They can be like an authorized user on your credit card for like a year or two, and then when you turn 18, they don't have to be the authorized user, and you can use your credit card however you want to use it. That's a great strategy when you're really young to build your credit. Now, there was no need for me to build my credit at 17. I had a job, but I was basically being paid in cash, so I could just use, if I was going out, I'd just use cash, whatever. But at 18, I got my first credit card, like I said earlier, Discover It, and that was honestly the only credit card I needed for the next 2 years. After that, I started to sign up for more. My second one, like I said, was a Chase Student Freedom, and then I got the regular Chase Freedom. Then I got the Amazon, the Fidelity as I started investing, the Bank of America recently, and I also forgot to mention I have the Apple. So yeah, this was probably the one credit card I wish I never got. I bought into the hype. This is when Apple released their Goldman Sachs credit card. Never had any issues, like I said, but I just bought into the hype. It was, titanium, freaking, it's hard, it's titanium, it looks cool, whatever, and then the app, obviously, the Apple Wallet app, was just very enticing for me. So I kind of, if I had any regret, I'd probably say me getting that credit card. But like I said, I don't have any debt. I never racked up any interest. I've always paid off my credit card in full every month. So no issues there. Now, if you want, you can always, they do say to pay off in full your full debt service. Like, so let's just say you have a credit card limit of 1,000. You have 200 that you spent on that 1,000, so you have 800 left over. If you want to, pay back maybe 150 instead of the full 200, you could. Just make sure that you're not going to get any interest tacked on. That's important. If you are going to get interest tacked on, pay it off in full. If not, keep revolving that 150 or whatever leftover remaining balance into the next month. It looks good on some reports when credit unions specifically look into it, because they see at least you have some debt on it. You don't want to have a tremendous amount of debt. So, like, for example, like I said, if you have 1,000 and you spent 900 of it, of that 1,000, you utilize 90%. That's way too damn high. At least pay back, all of it, if not 850 of that 900 that you use debt-wise on that credit card. But it's always healthy to just have a little bit remaining balance on your credit card, just so you can roll over it into the next month. It's not always wise, like I said. Be careful for the interest, because the interest rates usually can hurt you. Like I said, 24 to like 30%. So just be very cautious about that. But like I said, your utilization matters. Keep it under 20%, 10% if you can. Consistently pay it off. You can either pay it off in full, or you can pay it off close to full if you want to leave a leftover remaining balance, if you don't want to incur interest. And third, just make sure that you never close out your credit card, because unfortunately, credit card companies advise you not to close it out, because they want to they want you to still have and continue to use the card. So, every once in a while, if you want to make a small purchase on it, I advise you to do that. The credit limit's $5,000, make a small purchase like $50, $100, just to make sure that, the credit card companies are noticing that you're still using it, and you're not just keeping it around and not, using the credit that they gave you. Also, a great tip is to call up your credit card company every 3 to 6 months. Check in with them, see if you want to increase your credit limit. You don't necessarily have to, but if you realize like you got a raise from a job, or your annual, like I said, annual income went up, you can always look to maximize that credit limit as well. It's always best to just call around, see that, let's just say you call up Discovery, like, hey, I just got an increase in salary. I've been using your card consistently. I've been paying it off consistently. Is there any way I can basically increase my credit? And they'll approve you either on the spot, or they say, no, we need more. We need you to spend more. Usually, for the most part, that doesn't happen. They don't ask you to spend more, or they don't deny you, in my history. So just be on the lookout for that. That's only if you want to increase your credit limit. There's no necessarily need to anyways. And one piece of advice, if I had to give you guys, is just do not open up a credit card for incentives. I know I'm kind of being hypocritical. Excuse me, boys. Sorry, I'm being a little hypocritical, because I did basically buy into the hype with Apple. I did get a Bank of America credit card because of that $200 rewards incentive. But you just don't want to always be opening up credit cards just because of incentives. At least have 3 to 4 credit cards that you use every month on certain reoccurring purchases, like going out to eat, or going out buying groceries, or paying online like Amazon. Actually have a reason why you're using that credit card, not just to open up so you have a huge credit limit. Now in total, I think across all cards I have a credit limit of like close to 50,000, which obviously I would never use that in a full month. I would probably use like 1,000 of that 50 credit limit, $1,000 across that 50K credit limit. So for me, my utilization is very low. That's a huge thing. And like I said, I'm an average guy. I just knew what to do in terms of like financially, like good, smart financial habits, paying it off for the most part in full, not using all my credit limit. and keeping that utilization low, and that's how I was able to build a credit of 805. Now, a lot of folks aren't in that same boat. They don't have the financial discipline. They think it's free money. They start using it regularly and don't realize that their bills keep going up, keep going up, keep going up. And if they don't have the amount of income, or they don't have the amount of savings or cash on hand to pay it off, then you're gonna put yourself in a deep hole. And I don't want that for you guys. So that's why I'm telling you guys in this video to just be smart with your credit card. Treat it like cash, but cash that you have. Don't treat it like future cash, like, oh, you're gonna get 2,000 next month. No, like what you have now, think of it is think of the cash you have now and the cash equivalents in your checkings account, your income. Think of that and how you can use that to pay off your debt. Don't think of future income like I'm gonna get a loan or I'm gonna get an inheritance. Like, no, you're in the moment. Think about what you can pay off that debt now. That's very important. So like I said, it's very important to build your credit. I think it'd be wise for you to build your credit. There's so many great opportunities that you can leverage your credit in the future if you want to buy a home. Like, I plan on becoming a homeowner, so me having a great credit score, is going to lower my interest rate when I want to get a home. So instead of like me having to pay like 8-9%, I'll probably get like 5 to 6% just because of the discipline, financial habits I've built for myself in my late teens, in my early 20s. Also, personal loans, you're going to get a favorable rate on a personal loan. So if you want to take $5,000 out for a personal loan, I'm probably going to get a favorable rate. I don't really know exactly, but I can always shop around different lending agencies, and they'll give me a favorable rate as opposed to someone who has, let's just say, a 650 credit score and isn't really great financially with their money. And also a car loan if you want to. I personally would not go down that strategy because a car is basically a liability unless you're able to buy exotic cars and build a rental car business. That's a whole completely different topic, different discussion. But to actually take out a loan to buy a car where you're still going to have to pay off that loan and your car depreciates in value, it's not the smartest decision. For me personally, I know there's people that have done it and have been able to pay it back and love their car. That's totally up to them. For me, I think it only comes down to home loan and if I need a personal loan. Also, one piece of advice: if you own a business or are planning on creating a business, these business credit cards are going to look at your personal credit history. So if you have a great personal credit history and you have a great personal credit score, then you're going to get favorable rates. You're going to be able to apply for cards without going through so much hassle, so much questioning, because they realize if you're good financially with your personal credit cards and your personal credit, then your business credit is going to be hopefully transitioned into your business credit. And business credit, loans and all that, they give like $50K, $100K, just on the backing of you being able to build up your personal credit. So that's a quick recap of credit cards and credit. I definitely will go more into depth in other videos in regards to the specifics of credit cards and how they work. But yeah, definitely if you're in your early 20s or late teens, get a credit card. I recommend to discover it. If you also invest your money, Fidelity Rewards, if you have already a Fidelity brokerage, it makes total sense. If you order a lot of things on Amazon, getting an Amazon Visa cashback rewards card. And just depending on the bank you use, if you use Bank of America, if you use Chase, if you use Capital One, Citibank, whatever, make sure to get at least one credit card from those institutions as well. As always, gentlemen, it's been Gavetti here. Good day. Good day.